What's happening, crypto fam? Get ready for a high-octane download of the news that's shaking up the digital asset universe. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the action. We've got a jam-packed episode covering critical shifts, major player moves, and regulatory waves that you absolutely need to know about. From unexpected price movements to groundbreaking partnerships and institutional plays, this is the intel that will keep you ahead of the curve. Are you ready to dive deep into the stories that are defining the future of finance? Let's get into it. First up, we're breaking down the latest on Bitcoin's price action as it dips below a major psychological barrier, creating a ripple of volatility across the entire market. What does this mean for your portfolio, and what are the expert predictions for a potential rebound? We're diving into the details. Then, we shift gears to explore a massive partnership that's set to revolutionize how we use digital currencies in everyday life. This is a game changer for mainstream adoption, and we've got the inside scoop on how it works and what it means for the future of spending. Next, we're tackling the complex world of regulations. A key decision has been delayed, leaving many investors on the edge of their seats. We'll unpack the implications of this regulatory pause and what it could mean for upcoming product approvals in the crypto space. And finally, we're looking at a significant capital raise that signals massive institutional confidence in a major altcoin. This move could reshape investment strategies and highlight a growing trend in the market. Don't miss a second of this essential crypto update. Hit that like button, subscribe, and ring the notification bell so you never miss a beat. Bitcoin tumbles amid market volatility. The cryptocurrency market is experiencing a significant bout of volatility, with Bitcoin's price recently falling below the crucial $110,000 mark. This downturn has sent ripples across the digital asset landscape, prompting close observation from traders and investors alike as they search for signs of market stabilization. Adding a layer of complexity to the current market sentiment, Fundstrat co-founder Tom Lee has offered a cautiously optimistic outlook specifically for Ethereum, suggesting that the second-largest cryptocurrency might be nearing a short-term bottom within the coming hours. While Lee's analysis is inherently speculative, it underscores the prevailing uncertainty and the potential for swift, albeit temporary, reversals in asset prices. In parallel, the adoption of XRP is receiving a substantial boost through an innovative partnership between Gemini and MasterCard. This collaboration is poised to redefine everyday cryptocurrency transactions by enabling users to spend XRP directly, marking a significant stride towards the mainstream integration of digital assets into conventional financial systems. This move by Gemini not only enhances the utility of XRP, but also positions the exchange as a key player in facilitating seamless crypto spending for a broader consumer base. Regulatory developments continue to cast a long shadow over the market, with the U.S. Securities and Exchange Commission, SEC, recently announcing a delay in its decision regarding the Grayscale Cardano ETF. This postponement prolongs an already extended period of regulatory uncertainty, leaving investors in a state of anticipation regarding the approval of crypto-related investment products. The outcome of this decision is keenly watched, as it could signal the SEC's broader stance on the accessibility of various digital assets through traditional financial vehicles. On the institutional front, Pantera Capital is making a substantial play in the altcoin market, announcing its intention to raise up to $1.25 billion for a dedicated Solana treasury. This ambitious fundraising effort highlights a strong wave of institutional confidence in high-growth blockchain projects like Solana, reflecting a broader trend of diversification and increasing allocation towards promising altcoins. Such capital inflows are critical for the development and scaling of these ecosystems. Collectively, these events paint a vivid picture of the crypto market's dynamic and often unpredictable nature. Despite the short-term challenges faced by major cryptocurrencies like Bitcoin, ongoing innovation in product development and significant capital infusions from institutional investors underscore a persistent strategic interest in digital assets. The market's trajectory will undoubtedly continue to be shaped by evolving regulatory frameworks and prevailing macroeconomic conditions. But is this just a temporary dip, or is something bigger shifting beneath the surface? Stay tuned as we break down how capital is moving between the titans of crypto. Bitcoin ETFs face historic outflows amid capital rotation. In a significant development for the cryptocurrency market, Bitcoin exchange-traded funds, ETFs, have experienced their largest weekly outflows since March, with investors pulling a staggering $1.17 billion out of these products between August 18 and August 22. This trend signals a notable shift in investor sentiment and a potential reallocation of capital within the digital asset space. The BlackRock iShares Bitcoin Trust, IBIT, a major player in the ETF market, accounted for a substantial portion of these withdrawals, losing approximately $615 million. This outflow is particularly telling, as it coincides with a growing interest in Ethereum-based investment products, suggesting a possible rotation of funds from Bitcoin towards its closest competitor. This capital flight from Bitcoin ETFs is occurring against a backdrop of increasing institutional interest in Ethereum. Analysts like Vincent Liu from CIO Chronos Research point to the recent approval of staking mechanisms for Ethereum as a potential catalyst for increased activity in Ethereum-based ETFs. This development could stimulate broader altcoin adoption, with Ethereum expected to be a primary beneficiary. The data supports this narrative, showing net inflows into Ethereum ETFs reaching $2.5 billion since the beginning of August, a stark contrast to the $1 billion in outflows experienced by Bitcoin ETFs during the same period. The divergence in performance is further reflected in market dominance metrics. Bitcoin's share of the total cryptocurrency market capitalization has seen a decline, dropping from 61% at the start of August to 58.17%, according to recent TradingView data. Conversely, Ethereum's market dominance has grown, with its net inflows now constituting 26% of assets under management, significantly higher than Bitcoin's 11%. James Butterfill of CoinShares highlighted this structural shift, emphasizing that institutional preferences appear to be leaning towards Ethereum at present. Adding another layer to the market's complexity, Federal Reserve Chair Chair Powell's speech at the Jackson Hole Symposium on Thursday provided a temporary reprieve. Following his remarks, which were perceived as more measured than anticipated, the market saw a $594 million inflow, offering a brief moment of stabilization. While this inflow provided a modest rebound, particularly for Ethereum, Bitcoin continued to face selling pressure, recording a $1 billion loss for the week. This disparity underscores the differing trajectories of the two leading cryptocurrencies and their sensitivity to macroeconomic signals. Meanwhile, in Asia, Hong Kong is solidifying its position as a hub for crypto innovation. The region has witnessed a surge in participation from high-net-worth investors, driven by regulatory clarity and the introduction of institutional virtual asset services. The recent passage of stablecoin regulations and the launch of trading services by entities like China Merchants Bank are expected to attract more capital and further bolster Hong Kong's status in the global digital asset landscape. Looking ahead, the market remains keenly focused on U.S. monetary policy decisions and key macroeconomic indicators, such as unemployment claims. These factors will be crucial in determining the future direction of Bitcoin and the broader crypto market. Despite the current short-term corrections, the long-term fundamentals, including sustained institutional interest and regulatory progress in key markets, continue to support a positive outlook for digital assets. But what if this isn't just about Bitcoin and Ethereum? We're seeing major institutional backing for another key player in the altcoin space, and the numbers are staggering. Ethereum's ascent, capital rotation signals a new market dynamic. In a potentially historic shift for the cryptocurrency landscape, analysis from Altcoin Vector suggests that Ethereum is forging its own path, demonstrating momentum independent of Bitcoin for the first time in the current 3-year cycle. This development, described as the most significant capital rotation observed in 4 years, points to a rare structural setup that could fundamentally alter the market's balance of power. Analysts are observing diverging signals between the two leading digital assets. Ethereum's strength has turned positive, attracting substantial inflows from both institutional and retail investors, while Bitcoin is currently trading within a range-bound pattern, indicating neutral strength. Compounding this trend, data reveals that large Bitcoin holders have been actively taking profits and reallocating those funds into Ethereum, a phenomenon Altcoin Vector has identified as a risk-off rotation. The accompanying analysis from Altcoin Vector meticulously maps out various phases of liquidity movement. Historically, such episodes have often preceded periods where Ethereum significantly outperforms Bitcoin, particularly when Bitcoin's supply dynamics exhibit signs of structural weakness. This cycle, however, presents a unique scenario. While Bitcoin has traditionally served as the undisputed leader, this instance marks the first time Ethereum is exhibiting potential for standalone leadership. Several key catalysts are fueling Ethereum's traction, including consistent inflows into spot Ethereum ETFs, robust demand for staking its native token, and the burgeoning growth of real-world asset tokenization on its network. These factors are instrumental in ETH's ability to decouple from Bitcoin's immediate price action, facilitating a more fluid rotation of capital. Altcoin Vector's report also provides a crucial caveat. For Ethereum to sustain this leadership position, Bitcoin must maintain its broader market support. A significant breakdown in Bitcoin's price could disrupt this capital rotation dynamic. However, if Bitcoin manages to hold its current levels or consolidate effectively, Ethereum could continue to absorb market flows and solidify its role as the leading asset in this cycle. This scenario positions the current market environment as a critical structural inflection point. With Bitcoin holders realizing profits and liquidity actively flowing into Ethereum, the coming months will be pivotal in determining whether ETH cements its advantage or if Bitcoin reasserts its traditional dominance. Regardless of the ultimate outcome, this capital rotation underscores a significant evolution in how capital flows within the crypto market. Assets are demonstrating more dynamic movement than in previous cycles, and currently, Ethereum is emerging as the primary beneficiary of this shift. This strategic reallocation highlights a maturing market where different assets can exhibit independent strength and attract capital based on their specific use cases and technological advancements. While capital is flowing between the giants, there's also major news on the stablecoin front and a surprising correlation emerging with traditional markets. Get ready for insights into the synthetic dollar space and what it means for the broader financial ecosystem. Pantera Capital eyes massive Solana treasury raise amid institutional confidence. Pantera Capital, a prominent investment firm in the digital asset space, is reportedly preparing to launch what could become the largest Solana SOL treasury company to date. According to the information, the firm aims to raise an ambitious $1.25 billion for this new venture. This significant fundraising target signals a strong wave of institutional confidence in the Solana blockchain and its ecosystem, reflecting a growing trend of substantial capital allocation towards high-growth potential altcoins. Such a move could provide a considerable boost to Solana's development and adoption, potentially influencing the broader altcoin market. This news comes at a time when the cryptocurrency market is experiencing dynamic shifts, including significant capital rotation between major assets like Bitcoin and Ethereum, as detailed in previous reports. Pantera's strategic focus on Solana highlights a diversification of institutional investment strategies, moving beyond just the top-tier cryptocurrencies to explore promising projects with strong underlying technology and community support. Solana, known for its high throughput and low transaction fees, has been a focal point for developers and investors seeking scalable blockchain solutions. Furthermore, the broader market context includes evolving regulatory landscapes and macroeconomic factors that influence investor behavior. While Bitcoin has faced recent volatility and outflows from ETFs, and Ethereum shows signs of independent strength, institutional players like Pantera are making calculated bets on specific ecosystems poised for future growth. The success of this $1.25 billion raise could validate Solana's technological advantages and market positioning, potentially attracting further investment and development to the network. In other related developments, the market is observing intriguing correlations between traditional markets and cryptocurrencies. Bloomberg Intelligence analyst Jamie Coutts noted that Chinese equities are re-entering the spotlight and moving in tandem with Bitcoin, a pattern that has defined the past 2 market cycles. This suggests that geopolitical and macroeconomic factors impacting traditional markets, such as those in China, can have a significant influence on cryptocurrency price action, indicating a growing interconnectedness between digital assets and the global financial system. Additionally, the U.S. Securities and Exchange Commission, SEC, is actively reviewing new crypto-linked products. The agency has invited feedback on whether a staked injective, INJ, exchange-traded fund, ETF, should be approved. This move indicates a continued, albeit cautious, expansion of the types of crypto investment vehicles being considered by regulators, adding another layer of complexity and opportunity to the market. On the stablecoin front, Ethena Labs synthetic dollar USD has achieved a significant milestone by crossing the $12 billion market cap. According to Messari data, USD now commands over 4% of the global stablecoin market. This growth highlights the increasing demand for stable, yield-generating digital assets and the innovation occurring within the stablecoin sector, which plays a crucial role in the broader digital asset economy. So, we've seen Bitcoin dip, Ethereum rise, and major institutional plays in the altcoin space. What's the ultimate takeaway from this whirlwind week? Let's recap the biggest stories. And that's a wrap on another explosive crypto update. We saw Bitcoin dip below $110,000 amidst market volatility, while Ethereum ETFs are gaining major traction, attracting billions as capital rotates. Pantera Capital is making a huge play, raising $1.25 billion for a Solana treasury, showing massive institutional confidence. Plus, Gemini's XRP-powered MasterCard is set to revolutionize everyday crypto spending. Don't miss out on the next big move. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, and follow us on all social platforms for real-time updates. We'll see you next time.